welcome to the Deep Dive. Today, we're going behind the scenes of a company that's quietly powering many of the electronics you use every day. PG Electroplast Ltd.
PG Electroplast Ltd. Or PGEL for short.
PGEL.
You might not know their name, but you've likely encountered their work.
Oh, yeah, for sure.
They are a leading Indian electronics manufacturing company specializing in original design manufacturing.
Okay.
Or ODM.
ODM.
That means they're not just assembling gadgets.
Right.
They're designing them from scratch for some major global and domestic brands.
Wow.
Yeah.
And they're doing it incredibly well.
Really well.
Their latest annual report for FY 2024 reveals a remarkable growth trajectory.
Absolutely.
We're talking tenfold revenue growth in just 8 years.
Yeah, it's phenomenal.
So today's deep dive is all about unpacking that success story.
Yeah.
We want to understand how PGEL has achieved such phenomenal growth and what their journey tells us about the future of Indian electronics manufacturing. So maybe we can start with the company itself.
Sure.
PGEL is a pretty rich history.
Yeah.
Evolving from, I guess, humble beginnings.
Yeah, very humble beginning.
Into a powerhouse with a surprisingly diverse product portfolio.
That's right.
Okay, I admit I mostly associate them with air conditioners, but they actually do a lot more, right?
That's right.
Like what else?
So while their room air conditioners, or RACs,
Okay.
are a major part of their business, they also manufacture washing machines.
Oh, wow.
Air coolers.
Really?
And televisions.
Okay.
They even produce specialized plastic components.
Really?
Yeah.
Wow.
Demonstrating their versatility and expertise in different areas of manufacturing.
So it's really like end to end.
It really is.
For all sorts of different products.
Yes.
That's impressive.
Yeah.
And it all ties back to this unique ODM model.
Right.
It's not just about scale.
It's not.
It's about deep collaboration and innovation.
Absolutely.
So how does that actually work?
So they're working very closely with their clients.
Okay.
Understanding their needs and designing products that meet very specific requirements.
Oh.
So, for example, if a company comes to them and says, we need a washing machine that does X, Y, and Z.
Right.
They'll sit down with them, understand exactly what they need, and then design a product that meets those specific requirements.
Oh, wow.
Yeah.
So they're really getting into the nitty-gritty with the
Absolutely.
clients to figure this out.
Yes.
That's wild.
Yeah, and this approach really positions PGEL as a strategic partner rather than just a manufacturer.
Right.
So it's a key differentiator in a very competitive market.
Yeah, because you're not just churning out whatever.
Exactly.
It's actually like you're coming to the table with your own expertise.
That's right.
In design as well.
Yeah.
That's pretty cool.
It is.
And speaking of leadership, PGEL is a family affair.
Yeah, very much so.
We have Anurag Gupta.
Anurag Gupta.
As chairman, along with Vishal Gupta.
Vishal Gupta.
Managing finance.
Yes.
And Vikas Gupta.
Vikas Gupta heading operations.
Okay.
It's a very close-knit family.
Gotcha.
Very involved in the business.
So they've steered the company through this.
Absolutely.
Like phenomenal growth.
Phenomenal growth.
Yeah.
It's a leadership team with a clear vision and a proven track record.
Yeah.
Now let's kind of zoom out a little bit.
Okay.
And consider the broader industry landscape.
Okay.
So the Indian electronic manufacturing services, or EMS industry, is booming.
Okay.
And contract manufacturing, like what PGEL does, is a significant part of that growth.
Oh, interesting.
Yeah.
So what's fueling the surge in Indian electronics manufacturing?
Oh, well.
Why is this sector taking off now?
Several factors are at play.
Okay.
First, India has a rapidly growing pool of design and R&D talent.
Oh, wow.
Especially in areas like automotive and industrial electronics. This talent pool is attracting global companies looking for cost-effective and innovative manufacturing solutions.
So it's not just about lower labor costs.
It's not just about that.
It's about brain power as well.
Absolutely.
Wow.
The second factor is the rising purchasing power of Indian consumers.
Makes sense.
More people can afford electronics, creating a massive domestic market for companies like PGEL.
Great.
And third, the government is actively promoting domestic manufacturing through initiatives like Make in India, creating a favorable environment for the industry's growth.
It's kind of like a perfect storm.
Yeah, you could say that.
With all these different things coming together.
All these factors are contributing.
At the same time.
Absolutely.
To create this boom.
Yeah.
That's really fascinating.
It is.
It seems like all the pieces are in place for India to become like a global electronics manufacturing hub.
I think they're well on their way.
And PGEL is right at the forefront
Absolutely.
of this case.
At the forefront of this exciting transformation,
Yeah.
they are in a perfect position
Yeah, I mean, it sounds like
to capitalize on this growth.
they really are.
Yeah.
Now let's dive into the numbers.
Okay.
One of the most striking aspects of PGEL's recent performance is its phenomenal revenue growth.
Yeah, that's what really stands out.
They've achieved a tenfold increase
Tenfold!
in revenue in just 8 years.
It's incredible.
That's a compound annual growth rate.
Yes.
Or CAGR
Yeah.
of 34%.
34%?
Which is just phenomenal.
It's phenomenal.
Compared to, I think, the average company's growth.
Yeah, the average company is nowhere near that.
Yeah, like 2% maybe?
Something like that, yeah.
So 34% is just
off the charts.
unheard of.
It really is.
So how are they doing that?
Well, it's a testament to their strategic execution and ability to capitalize on market opportunities.
So they're just really good at what they do.
They are very good at what they do.
Yeah.
If we break down the revenue by segments, we see some clear winners.
Okay, so what are those?
So their RAC business.
Okay, the air conditioners.
The air conditioners grew by an impressive 26%.
Wow.
Year on year.
Okay.
Reaching 1,317 crores in FY 2024.
Okay.
Washing machines also saw healthy growth.
Okay.
Indicating a broad-based expansion.
So it's not just one product driving this growth.
It's not.
They're firing on all cylinders.
They are firing on all cylinders.
But impressive revenue growth is only part of the story.
That's right. What else is there?
Sustainable success is about profitability, not just sales.
Right.
And this is where PGEL's performance gets even more interesting.
So let's dive into the profitability metrics then.
Sure.
What can you tell us about their margins and cost management?
Well, their EBITDA,
Okay.
which essentially measures their operating profitability, grew at an even faster rate than revenue.
Really?
A CGR of 38%
Wow.
over the past 8 years.
This suggests that they're becoming more efficient in managing their operations and squeezing more profit out of every rupee of sales.
Wow. Okay.
They've achieved a healthy EBITDA margin and a strong PAT.
Strong PAT.
Indicating that they're not just growing,
Right.
but they're doing so efficiently
Okay.
and profitably.
That's a powerful combination.
It is a powerful combination.
Strong top-line growth coupled with improving profitability.
That's right.
So they figured it out.
It tells us they're not sacrificing margins for the sake of growth.
Right. They're not just growing.
They're focused on building a sustainable and profitable business.
Okay. And what about
And their return on capital employed, or ROCE,
ROCE?
also paints a very positive picture.
Okay. What is that?
So ROCE is basically a measure of how effectively a company is using its capital to generate profits.
Okay.
And in PGEL's case, it's reached a very respectable 21.6%. This means that they're using their resources effectively to generate solid returns for investors.
It sounds like they've cracked the code
They really have.
for profitable growth in a competitive industry.
It's impressive.
Yeah. But what about the future?
Well, that's the million-dollar question.
I guess so.
Can they sustain this momentum?
Yeah. Can they keep this going?
To answer that, we need to look beyond the current numbers and delve deeper into their strategic initiatives, their order book, and their capacity utilization.
Okay.
We'll get into all of that
Sounds good.
in the next part of our deep dive.
Yeah, let's unpack those aspects in the next part of our deep dive.
Welcome back to our deep dive into PG Electroplast Ltd. In the last part, we explored their impressive growth trajectory and their profitable business model. Now let's delve deeper into their strategic initiatives and see if they can maintain this impressive performance.
Yeah, I'm really curious about their order book. A strong order book is a good indicator of future growth, right? What insights can we get from the annual report?
Yeah, a robust order book suggests a healthy pipeline of future business, which is crucial for sustaining growth. While PGEL's annual report doesn't disclose specific figures, they do mention a robust order book and strong customer relationships. This qualitative assessment implies a positive outlook.
Okay, it sounds promising.
Yeah.
But beyond these general statements, what can we infer about the potential for new client additions?
That's where we need to connect the dots. Remember, the Indian electronics industry is booming, driven by several factors we discussed earlier. This rising tide will likely lift many boats, including PGEL's. As India becomes a more attractive destination for electronics manufacturing, PGEL, with its expertise and track record, is well positioned to attract new clients seeking reliable and innovative manufacturing partners.
So they're not just relying on existing customers for growth. They're ready to ride the wave of industry expansion and capture new market share.
Precisely. But can they produce enough to meet this growing demand? That brings us to capacity utilization.
Right, because building a great product is one thing, but you need the capacity to actually manufacture it at scale. What's PGEL's strategy in this area?
PGEL is clearly aware of the importance of capacity expansion. They've earmarked a significant amount of capital expenditure, 380 crores for FY 2025. This includes setting up a new integrated RAC unit in Rajasthan, a new building in Greater Noida, and expanding their AC capacity at their existing Supa facility.
So it's not just about maintaining their current capacity. They're aggressively expanding to meet the anticipated surge in demand.
They're taking a proactive approach to ensure they can deliver on those robust orders we talked about. This investment in capacity expansion is a clear signal of their confidence in the future growth of the business and their commitment to capturing a larger share of the expanding market.
It's like they're building the runway while the plane's already taking off. But simply expanding capacity isn't enough, is it? In a fast-moving industry like electronics, you need to stay ahead of the innovation curve.
Absolutely. And that brings us to R&D, another area where PGEL is making significant investments. Their annual report highlights their focus on upgrading tooling technology for durability and precision. They're also collaborating with global tooling experts, ensuring they're at the forefront of technological advancements.
Yeah, for an ODM company like PGEL, this focus on R&D is crucial.
It's not just about building products, it's about building the tools to build those products. By investing in cutting-edge tooling technology and collaborating with global experts, PGEL can offer its clients the latest and greatest solutions, attracting more business and maintaining their competitive edge.
It sounds like they're playing the long game, investing in R&D to ensure their future success. But let's not forget that even with a booming industry and a strategic approach, financial health is paramount.
You're absolutely right. We need to examine PGL's financial vitals, debt levels, cash flow, and working capital management to see if they can sustain this growth trajectory.
Okay, let's start with debt. Are they taking on too much risk to fuel this expansion?
Well, while the annual report doesn't explicitly state their debt-to-equity ratio, we can make some educated inferences. Those ambitious capacity expansion plans we just discussed, they require significant capital investment. It's highly likely PGEL is utilizing debt financing to fund at least a portion of that expansion.
So debt itself isn't necessarily a red flag, especially if it's used strategically for growth.
Exactly. Many companies in growth phases leverage debt to expand their operations. It's about striking a balance. Excessive debt can be risky, but a manageable debt level can be a powerful lever for growth. The key is to ensure that the debt is used wisely and that the company generates sufficient cash flow to service its debt obligations.
It's a balancing act. But debt is only one piece of the puzzle. Let's talk about cash flow. How efficiently is PGL managing its cash flow, especially in a business-to-business environment where payment terms can impact liquidity?
The annual report doesn't provide a detailed cash flow statement, but we can glean some insights. PGEL operates in a B2B context, meaning they often extend credit to their clients. This can create a lag between when they deliver products and when they actually receive payment, affecting their cash flow.
So even if they're profitable on paper, they might not have all that cash on hand immediately.
That's right. And managing working capital, which includes inventory, receivables, and payables, becomes crucial in this scenario. They need to ensure they have enough cash to meet their short-term obligations while optimizing their operations for maximum efficiency.
It's like having a full pantry, but no cash to go grocery shopping. You need to manage your resources carefully.
A great analogy. The report highlights PGL's efforts to optimize inventory levels and improve the collection cycle for receivables. These are positive steps, but we'd need a more detailed look at their financials to assess their overall working capital efficiency.
Yeah, it's important to remember that there's always more to the story than what's readily apparent. Now, while their financial performance appears strong, we can't ignore the challenges that PGEL faces.
Every company faces headwinds. The key is how they navigate those challenges and mitigate potential risks. Let's shift our focus to that in the next part of our deep dive.
Welcome back to the deep dive. In the previous parts, we really got into PG Electroplast, Limited's impressive growth, their strategic initiatives, and their solid financial foundation. But, every business faces challenges. What are some of the headwinds that PGEL acknowledges in their annual report?
Well, they point to several risks that could impact their business. Economic fluctuations, for one. The global economy is always in flux, and downturns can affect demand for consumer durables, like the ones PGEL manufactures. Currency fluctuations could definitely impact their bottom line. What else?
Then there's the competitive landscape. The electronics industry is fiercely competitive, with new players emerging all the time. PGL needs to constantly innovate and stay ahead of the curve to maintain its market share.
So it's not just about being good,
Mm.
it's about being better than the competition. Exactly. They also highlight supply chain disruptions, which have become a major concern in recent years. The pandemic and geopolitical tensions have exposed vulnerabilities in global supply chains, and these disruptions can impact PGL's ability to source components and deliver products on time.
So they need to be really agile and have backup plans in place.
Absolutely. And finally, they emphasize the need to constantly innovate. The electronics industry is driven by innovation, and PGEL needs to invest in R&D and stay ahead of technological advancements to remain competitive.
So even though they're doing well right now, they can't afford to rest on their laurels.
That's right. Complacency can be a killer in this industry.
It's like a shark. You have to keep moving forward to survive.
Exactly. They need to be constantly adapting and evolving to stay ahead of the game.
So they've identified the risks, but how are they actually mitigating them?
Well, they highlight several strategies. They emphasize their focus on diversifying their product portfolio and their customer base. This reduces their reliance on any single product or client, making them less vulnerable to market fluctuations.
So it's like not putting all their eggs in one basket.
Exactly. They're also strengthening their relationships with key suppliers to ensure a more reliable supply chain. And they're investing heavily in R&D to drive innovation and develop new products that meet evolving consumer demands.
It sounds like they're taking a proactive and multifaceted approach to managing risk.
They are. They're not just sitting back and hoping for the best. They're actively identifying potential challenges and putting strategies in place to address them.
Which is exactly what you want to see in a company.
Absolutely. It shows that they're forward-thinking and committed to long-term success.
Well, it's been fascinating exploring PG Electroplast Ltd. They're clearly a company on the rise with a strong track record of growth, innovation, and financial stability. But as with any investment, it's important for listeners to do their own research and due diligence before making any decisions.
Absolutely. The information we've discussed today is based on their annual report and other publicly available data, but it's always wise to dig deeper and consult with financial professionals before making any investment choices.
Couldn't agree more. We always encourage our listeners to be informed and engaged investors. So as we wrap up this deep dive into PG Electroplast Ltd., what are some key things listeners should keep in mind as they explore this company further?
Well, they should definitely pay attention to the evolving industry landscape. The electronics industry is constantly changing, and PGL needs to adapt to stay ahead. They should also keep an eye on PGL's debt levels and cash flow management. As they expand aggressively, it's crucial that they maintain a healthy financial position.
And they should definitely stay informed about any new client additions or major contracts that could impact PGEL's future growth.
Exactly. Those are all important factors to consider when evaluating any investment opportunity.
So listeners, keep those things in mind and happy investing. We'll see you next time on The Deep Dive for another deep dive into the world of business and finance.